Thanks for coming, everyone. I know it's the last panel of the event, so everybody's kind of like happy. Outside, there's a party, right? People are can't wait to go home, and we put this subject in the last one. But I think this is the most important subject for the industry. And let me introduce myself. My name is Francis Lee, and we're going to elaborate more later. I work for Square Financial. I'm also a professor in the university teach economy. So that's why we have this subject today, and I hope you can enjoy it. So let me just go around the table and let them introduce themselves.
Yeah, so thanks, Francis. So my name is Vincent. I cover the Southeast Asian market in Cboe Global Markets. So just a background on Cboe Global Markets. We are the largest options exchange in the US, and our business includes equities across North American markets, Australian as well as Japanese market. And we also have a Forex business in Cboe as well. So I think given the trends of the US market, we are seeing a lot of more participation in US equities. That's why I think it will be an interesting topic today to talk about APAC market as well as US market and how elections and some of the interest rate decisions will affect the US market. Thanks, Francis.
Hello, everyone. My name is Mohammad Isbeer. I'm the Chief Institutional Officer at Equiti Group. Equiti Group is specialized in providing liquidity to retail brokers. We are licensed in 9 different jurisdictions globally, and we have about 15 offices, headquarters out of the UK and Dubai. Very excited to be on this panel and talking about this topic as well. I'll try as much as possible to give our views on the US markets and maybe bring in a little bit of the kind of the Middle East. I don't have a lot of view on the APAC region, but I can try as much as possible to kind of give as much from my background as possible. Very excited to be on this.
Hi, good afternoon, everyone. My name is Jonathan. I'm the CEO and Managing Director of Quantum Metal Thailand. It's very good to be here today with on this platform with all of you. Our companies are actually into e-commerce, where we buy and sell gold. We create wealth and revenue for people. We are also a group that is listed in the OTC market in the US. We are currently present in over 13 countries. We are ever ready to be happy to be shared our business propositions with everyone, and also to share our views on this very interesting, like what Francis has said. This is actually a very important time and also a very important topic for the day. We look forward to share I try our best to share our views to everyone as much as possible. Thank you very much.
Okay, thank you. As I previously mentioned, I think this subject is very important is because I think for those who are sitting here for working in the industry for more than five years, which means you really love the market. You probably not love the company, but you love the market, you love the FX market. So everything happens in the FX market. That's very important because in my career in the past 25 years, I think the most successful sales in the industry is the people who actually knows the market. So you never go out and sell the bonus, the promotions, or the leverage, because it's always another company offer a better leverage or better promotions. I think the best sales in this industry is the people who actually knows the market. Sell the market will sell itself. So that's why I think everyone in the industry need to know what's going on in the world. Especially I think those are the two key points, key events from now to the end of the year. I think the first one is interest rate. Tomorrow, I think this time we already know the Federal Reserve will cut the interest rate for how much? The problem is how much, right? So that's our subject number 1 today. So I want to know the view of everyone's. Tonight. Actually, it's tonight. Federal Reserve are going to cut interest rate. So how much you think the Federal Reserve will go? Because a lot of people say quarter points. And also another half of the people say 50 points. So what's your view on this?
Mind if I start?
Yeah, you want
Yeah.
to start, of course.
Yeah, so I think the market has, according to end of week last week, I think the market was pricing maybe 73% is towards a 25 basis points cuts. There's still 27% towards 50%. Now, the main thing to look at here is if you look at the core price inflations that we've seen, if for the last 5 consecutive months there has been a drop in inflation figures, which supports an aggressive rate cut. But at the same time, we're looking at some indicators which is very important as well, like consumer spending. Consumer spending and consumers' resilience seems to be dropping massively as well. So I think the Feds will be quite vigilant on making a strong rate cut of 50 basis points, because that will have an extreme effect on the market. The market is pricing a 25 basis points cut. I think it's more likely given the consumer spending and the consumer resilience. Now, overall, this is a start of a cycle, and the cycle, expectation is for about 200 basis points from November after this cut until maybe next September. So this is a cycle. It shouldn't happen quickly. Shouldn't make a big shock in the market. So I would be in favor of a 25 basis point cuts, and then a continued trend of about maybe 2% cut from now until next November.
So you're thinking 25 pips.
Yes.
All right. So if it's 25 pips, what the market will react?
Yeah. So as I said, the market has already priced in that 25%, at least 73%. So I wouldn't see a major reaction in the market. It will give a bit of confidence into the U.S. Economy, because yes, inflation is dropping. The Feds are acting in an appropriate measure. They're not acting in a panicky way, which is, I think, what the market needs to stability. I mean, the dollar is at its lowest points in a long time now. I think the last thing the Fed wants to do now is create another panic, and that will reflect as well on the bonds market. It will reflect as well on the equity market, as well as the U.S. dollar. So I think the Fed is going to try and be as rational as possible and not create any panic, which is why I support, which means I don't expect a major move in the markets. But if there is a surprise effect and there was a 50 basis points cuts, I think we'll see a major hit on the dollar, at least for the foreseeable future.
I see. How about you, Vincent?
So I think many of the analysts have actually looked into, like Isbeer has mentioned, 25 basis point rate cut. So I think based on market consensus, there's a consensus like there will be at least a 75 basis point cut by end of the year. So whether they do it in a larger quantum in one go, which means they do it at 50 basis point and 25 after, it's something that we have to look forward to. And I think for myself, I view that a gradual cut, 25 basis point for each of the cut, will be more stabilizing for the market as well. So actually, we have also seen on Cboe's exchange, there's also increasing trend of using some of the tools like SPX options and VIX options for investors to hedge in the market. So whenever there's a key market news like an interest rate decision or any inflationary news towards the US elections, there's also an increase in usage of some of the tools on Cboe's options market. So we are seeing that many of the clients are actually positioning themselves for probably a better or more positive looking market ahead of the rate cuts.
Okay. How about Jonathan?
Yeah, I personally, in my view, that the price hike of the U.S. interest rate over the past years has been quite aggressive, to be honest, and this has particularly hurt most of the Asian currencies. I think, in my best opinion, a lot of people are expecting a 25 basis point cut, which I think this is what the Federal Reserve would do, and coupled with the fact that, but in all accounts, I think this will justify a very positive momentum for the Asian markets, not just for the Asian markets, but also for the Asian currencies as well. But we're seeing that some of the height on bonds market has also been looked into, and it has also been has got a better demand over the past few weeks, and I believe that I also believe that the fact that uh, over the over the past few quarters that we're seeing that the U.S. interest rate uh, has been overly done, and I believe that it is real time that for them to cut interest rates, but also if you look at over the past historical trend, each time when it close to a U.S. election, they tends to do a rates cuts. So I don't see there's something that is new. Like what Isbeer has said, I think the market pricing has also the market has also priced in on the rate cuts. But what we're looking at is what we need to really look at is actually on the other portfolios, the other portfolios, like for example the bonds, the equities, and also for us in the gold industry, we are actually very price sensitive towards the interest rates. So I think this is something that we should look forward to over the next few quarters. Yep.
Okay, I think as everybody knows, the market already pricing these quarter pips. So can I safe to say tomorrow the market will go up, the stock market, because the market is celebrate because there's no surprise.
I think it's pretty much safe to say that.
Yeah.
I think the expected scenario is for 25 basis points, and yes, that will give that confidence. Now, what's going to happen if there is a 50 basis points cuts? This is
Right,
like,
that will be surprise.
yeah, that's going to
Yeah.
be a surprise. And one of the things that I was interesting for me is that you might actually start looking at the Dow and S&P going up and the Nasdaq maybe going down, you know,
Right.
because that'll give it maybe different industries, different perspectives. So we think Nasdaq, for example, will start to go down,
Yeah.
and then Dow Jones and S&P start to go up. Obviously, the biggest effect will be on the bond market, and like you said, the bond market has been very active in the last couple of weeks. A 50 basis points move can also have a dramatic effect on the bonds market. I would say it's a very unlikely scenario, but yes, 25 basis points will give a bit of confidence, will
You'll
give a bit of
celebrate,
stability,
yeah.
and will push the dollar.
So if the 50 points cut means the markets worry about the future of the U.S. economy
I think so.
because the CPI, everything will
I
start to
think
drop.
so. I think
So I think that hurts the U.S. economies. So if tomorrow it's a 50 points, let's just sell the market. Right.
I believe, yeah, sell the dollar for sure.
Sell the dollar.
Yeah,
for sure.
the dollar definitely is a major sell. I mean, dollar is at its weakest point, and another surprise effect and another shock to the system can be dramatic. And as I said, when the odds are 73 to 27, and that's the end of last week, maybe it's even more now. So when the surprise is that massive, the shock is quite big. And then you look at also asset classes like gold, for example, something that will immediately be affected. And we've seen gold volatility in the last couple of months has been extreme. With the elections on the doors, with all of that, you know, increased uncertainty, I think it will be a big surprise and a big effect on the dollar.
Right. Then how about the dollar value? Because we all know the interest is actually the value of the currencies. So if everybody knows we're going to cut 3 times by the end of the year, which means the dollar value is decreased. So what do you think? You think the dollar index will going down or going up by the end of the year?
Yeah, so I think in just my own personal view, the dollar will continue to go down just because of the interest rate cuts. So there'll be more demand shifting towards the other currencies instead of holding US dollars. So we might see a more larger sell-off in the US USD currency. That's where we might possibly also look at some of the other currencies picking up in terms of the value as well. So I think, but like Isbeer mentioned, I think it will be also useful to look at what is the exact rate cuts that the Fed is going to do so, and whether it will be a gradual process or will it be a large 50 basis point cut in one go. So a larger cut in one go might trigger more negativity and also more sell-off in the USD. But however, if it's a gradual cut, I think possibly that the US dollar has already priced in a 25 basis point price cut. So I would say it might be we might see it more stable if the cut is a 25 basis points.
Okay.
I just want to add one
Yes,
small
please.
thing before I pass it on to you.
Yeah.
Sorry, I think yes, the dollar index is going to be affected, but like you said, Francis, there's a lot of pricing in, not only for the next rate cut, but also for the almost the next 12 months. A lot of it is already priced in. I think the major element and the major changer here on the dollar index is going to be the election more than the rate cuts, because a lot of this is already priced in, while the odds for the election is still 50-50. So there's a lot of surprise effect is weighted on that side. Yes, there's going to be effects of any small and minor changes in the next few rate cuts, but I think over the next 12 months, there's a lot of pricing into the price of the dollar.
100% agree. I think you're right. I think the next bomb will be the U.S. president instead of the dollar index. How about the metal market? Because I think if everybody knows, whole market knows, cut 3 times, the dollar index going drop. How about the metal markets?
Well, this one interesting part. The height of the U.S. The U.S. rates, we thought that it would have a inverse impact on the gold market, but as you can see from last year itself, the gold market has trended up tremendously. But with now with the cut of interest rate, we will see that the gold price will continuously be supported by the US rate cuts. But what's more interesting in this part is not just on the US, not just on the metal markets itself, but also on if you look at regional wise, the Japan has actually decided to raise its interest rate. So the unwinding of the carry trades actually took place. The unwinding of the carry trade actually took place. A lot of it before they actually borrowed in a lot of trades where they actually borrowed in yen and they put it in US dollars because of the rate hike. But if you can see that there's a lot of if there's an unwinding, then it will have certain impacts on most of the trades and also in metals as well. Yeah.
Great. I think that's a trick to be an analyst, because after 10, 20 minutes, you still don't know buy dollar or sell dollar, right? No one knows, right? That's how we do every day. Just give a long term, short term. Yeah, a little bit. All right, so let's move to the next one. I think the next one also very important. We all know the dollar. We all know the Federal cut interest rate. We probably can expect the inflation is coming down, and we also can expect a little bit unemployment might be go a little bit up, and the people probably spend less. But that's in the United States. But today, when we talk about APAC or we talk about elsewhere, it's always look at the U.S. And it's very major important news. It's coming in the next 2 months. I think after 2 months, we should know who is the U.S. president, right? So I think that's also very important. That's before the next issues. Let's take an easy vote. Everybody raise hands, please. Everybody raise hands, please. If you think that Trump will win the West president in November, please stay your hand. All right, 1, 2, 3, 4. That's 4. Okay, the others are Harris. All right, now we know who we're going to win. Anyway, so my first question, how do you see the U.S. presidential election potentially impact the trade relationship between the APAC countries and the U.S.?
Yeah, I can
yes.
Go. Yeah, I can go.
Please
first.
go.
Yeah, so the U.S. election is definitely something that is in everyone's calendar. So everyone is looking forward to how the markets will react on during the U.S. elections. But actually, historically, during the U.S. elections, actually the markets are remain relatively flat across the past few elections. So actually, there was a research done before, and the market was relatively neutral for most periods, wherever no matter Democrats or Republicans win in the elections. But we do see some movement or some trends in the VIX especially. So actually the VIX monitors the 30-day volatility of the S&P index. So from the VIX, we actually can understand how the markets are reacting, whether they are nervous or whether they are relatively calm on the markets. So from there, we also can look into how the markets may potentially react. So if you see the VIX having a spike, so we might see a more bearish looking market in the movements up to the U.S. market, the U.S. elections, I mean. And also, furthermore, U.S. market actually comprise of 40% of global market cap for equities. So any movements or any positivity or negativity in the US market can actually have a great impact on global markets, especially APAC market. I think particularly for the tech focus markets like Taiwanese or Korean markets, Japanese market as well. So we might also be able to see some correlations in terms of market movements whenever you see US markets trends. So I think for investors, I would also pay a close attention to APAC markets like Japanese, Korean, and Taiwanese markets.
Thank you.
So one of the good things about I don't know if the good things, but one of the funny things is that one of the few times in history that a president has served the 4 years and then he was not elected and then he comes back and maybe elected again. So if actually Trump wins, that's going to be a few times of the history that a president comes back after losing a tenure. But the thing is that with Trump now we know exactly how he's going to do it. We've seen how he operated in the 4 years, and I think, from an Asia perspective, especially with China, the kind of the tension when Trump was there, it was quite high. While we see Kamala is an extension, and I think Kamala is an extension of how Obama policy was more than how Biden policy was. So, I think from an Asia perspective, from an APAC perspective, we know exactly what Trump is going to do. He's done it before, and now he's going to come back, and he seems a bit more aggressive as well in his approach. While when Obama was in office before Trump, things have gone very smoothly with China. Has gone even with the Middle East. I'm talking from a Middle East perspective as well. With Iran, with the Middle East, there was a good from a trading perspective, from an economy perspective, there was always better communication. So I think Trump is not going to be a surprise. We know exactly how it's going to be. Slightly more aggressive approach, in my opinion, this time. With Kamala, I think it's going to be a continuation to the time where Obama was in office, and that should open up some trade bridges over again with APAC.
But I'm not sure about Trump because everybody knows we know him, but actually he always does something out of surprise.
Yeah.
So maybe he's like, if he really win the house, he maybe say Xi Jinping is my brothers. That would be surprise.
Yeah.
Maybe.
Yeah.
So
yeah.
It's really difficult to say.
It's
I
really
think.
difficult to say, but I think what I'm trying to say is as a pattern of where he is, like even from an US internal US economy perspective, his major views is give a tax cut for the big corporations, for the wealthy, try and move manufacturing into the US. Like you said, there will always be surprises, but from his donors, from his supporters, the people that are pushing for Trump's, he wants to keep manufacturing in the US. He wants to give tax cuts for big corporations. So I think from a general trade view perspective, he will be consistent. But obviously, when it comes to details and especially the way he talks, there will always be surprises.
Yeah.
At least that's my view on it.
I know. So how about Johnson?
Yeah, I do agree. I think in my personal opinion, thinks that what Trump does is pretty much expected. But we look at, I follow up very closely on the debates between Trump and Harris. They both have very different policies and directions. Actually, Trump, as we know that he likes to do things surprisingly different, and he wants to take aggressive actions like what Isbeer has mentioned. One of the things that he has said up front is that I'll do business tax rate cut, and things like that. But whoever it is, I think both with both different agenda and also different policies, it will have great impact on the currencies. But irregardless of what their policies and also their agendas are, it's timely that the rate cuts on the US are good for business irregardless, because the rates hike has always been a sort of a suffering moment for all Asian currencies, particularly because we have a lot of large trade between both Western and Asia. But if you look at Trump, we want to go back to our fond memories of where he was a president before. when he started the U.S.-China trade wars, and that's where it took us by all surprise because it has never been done before, right? So he has taken that on a toll, and we are actually kind of fearful that that will actually happen again, because on the U.S. policies is like always welcome fair competitions, irregardless of fair competitions and fair innovations all around the globe. But if that were to happen again, then we will see competitions between both large major countries again. But if Harris were to take place, I think like what Isbeer said, I think it's a continuation of policies from Obama. It's sort of like a safe play. You know, if we wanna do a fair business, we have to go on a safe zone. But if Trump were to take on the president role, I think one of the first few things that we want to see is to the Ukraine and Russia war ended. I think that's what he will do if he were to come in, and I think that's one of the positive thing that will one of the positive thing for the market actually. Yeah.
Good. So, who's going to make America great again? Let me ask you this question because sounds like Trump can did, but nobody likes him. I think, especially all the way from media and what he did in the debates. So who actually can take American to the next level? Because we all missed the day, like 2008. I think U.S. and China is a good couple, and U.S. designed all the product, and China made all the product. And when we go to Shanghai and Beijing, everywhere is popular. Everything it's very great. But China will become a major debate subject, no matter what. Like, they cannot avoid it. They're going to talk that in the next debate or when they speak to the public. So what's your view about China and the U.S. relationship, no matter who win the House, for the next 4 years?
I'm going to speak very briefly on this because I'm not the expert on the topic, but I feel that what happened also with COVID, with Trump policies in the last tenor, has also pushed China somehow to take a reaction that China would not, regardless of who sits in office in the US, China would take time to change their position now because they were pushed, I think, with COVID, with Trump before, they were pushed into the corner. And as we all know, China would take time to kind of readjust and reopen again. Obviously, I think it's quite clear to me from someone who's sitting afar from this, is that Trump was quite aggressive. The relationship between China and the US will always have more tension with Trump in office. So I think Kamala would be a bit more suited to kind of ease things down in the next 4 years. But does that mean that things are going to go back to normal? I think it's going to take a lot more time than that, in my opinion.
How about you?
Yeah, so maybe talking about Kamala, I think Kamala and Biden they were a team, right? So I think the way Kamala will treat the U.S. relations with China would largely be quite similar to how Joe Biden is doing. So we would see still quite a tense relationship between Chinese and U.S. relations between the two countries. So I would say we will still see the same kind of relationship between them if Kamala gets elected as the president. But for Trump, I think like we all agree, he is unpredictable, he's volatile. So in a way, he might turn things in favor of becoming friends again with China. Like what he said, he will become friends with North Korea, Russia. He will stop the war, everything. So I think we can also view that Trump, he might also do things more positively now, given that how he did it before when the tensions between the two countries raised significantly when he was in office. So I would say Trump might be something that in markets might see view positively because he might do things differently and more aggressively to possibly make it better relations between the two countries.
All right, thank you. How about Jonathan? What do you think?
Well, this is a tricky one because making America great again, I'm not sure because I really don't want to take any of the sides. But looking at both candidates, I think if you want a more progressive approach, Trump will be off a better candidate. compared to Kamala. But of course, a lot of like what Francis has said, a lot of people wouldn't be favorable on the aggressive approach by Trump. But if you look at some of the things that needed actions from the U.S. government, I think Trump will be a better candidate comparatively uh, because then he would not consider a lot of his decision wouldn't account for political reasons, and it's more for business purposes. So whereas for Kamala, I think a lot of it has got to do with regional political developments in favor of the U.S. government. Yeah.
Okay, thank you. We have 10 minutes left, and let's open the stage to everyone. Anyone have a questions you want to ask of today's subject? Otherwise, we'll just go out and join the party and the pack and leave. This is the last section. Anyone? Alrighty. Yes. Cool. Any final words you want to say?
Nope.
No?
No.
That's great.